Hi everyone, thanks for checking in. It's Adam here at Lowe & Realty, and today we're looking at the Wellington real estate market, analysing the actual data, of course, for the month of July 2026 compared to the last couple of years, and seeing what the trends are and seeing if we can draw any conclusions about what might be to come. I suppose in summary, folks, unfortunately the Wellington market remains weak, and it has been weak, and this has been a nationwide story, but certainly Wellington hasn't escaped it. We were seeing some recovery heading into the new year. In the first few months of this year, basically we've seen deterioration of the market in most regards since the Middle East conflict broke out over the last 4 months or so. So in July, unfortunately, we reached the new low point in values since the peak in late 2021, and so no question, weakness remains in the Wellington market. Message to sellers is that values, listings, and sales have all fallen recently. And so presentation and realistic pricing are absolutely critical if you want to be on the market in these conditions. Message for buyers, of course, is you have got incredible market conditions for you. You have an amazing amount of choice and an ability to negotiate in the market at the moment, so get in amongst it. Let's look at median sale price. 725,000 in July 2026 versus 755,000 July 2025. That's a drop of 4%. Rather than looking at that one point in time, I find it most useful to look at what has happened and the trend over the last few years. So you can see from that red line, which captures the 6-month moving average. The big drop, of course, happened in late 2021 throughout 2022. Since then, it's broadly been more stable. We saw a gradual uptick there in 2023 as we headed into the election. We have not yet seen that phenomenon take place as we head towards this current election, so the next few months will be certainly interesting in that regard. Then, since the election in late 2023, whilst broadly the theme has been overall stable-ish, you have to say that there's been a very gradual erosion of median sale prices there over the last 2.5 years or so. We did see there was a little bit of a recovery there, as I said, in the early months of this year, but the last few months that deterioration has resumed again. So down 4% on a year ago, but the recent trend has been very, very gradual erosion of median sale prices. But I don't pay too much attention to that because it reflects the mix of properties sold as well as the actual underlying values. And it's, as owners, of course, and if you're looking to sell, what you're interested in is what's happening to underlying values. So let's look at the Real Estate Institute House Price Index. And so these league tables here, for a long time now, Wellington has fallen the furthest of all the regions in the country since the peak in late 2021. So the latest data shows 29.2% down from the peak in Wellington region. Now, interestingly, Wellington City is faring a little worse than that again, and is down by 31%. From the peak. So that's certainly a very big drop. Auckland, not miles behind at 25% down. All the rest of the different regions of the country quite a bit further behind us in terms of the amount, the value drops since the peak. So Wellington region values are roughly back to where they were in August 2020. So that was just after COVID. And Wellington City values are back roughly to where they were way back in September 2019. So that is significantly before the COVID initiated boom. So that whole boom has been unwound and a bit more. Over the last year, Wellington also has fallen further than anywhere else, but the numbers are much smaller, 4.4% down. Over the last 3 months, however, there is varying degrees of weakness across quite a lot of the country. So Wellington down 3.2%. Interestingly, Southland 3.8% down. That's bucking the trend because Southland has generally been quite a good performer. But multiple other regions also have been have retrenched, sort of 2, 3, 4% across the country. So Wellington is not kind of a standout in that regard. And this is the interesting thing. As I sort of said at the top, we were seeing signs of general improvement in the overall data in the market heading into about March, and then since April, so April, May, June and July, generally conditions and the data have shown deterioration in the market. I think it's too much of a coincidence that coincides with the conflict in the Middle East. So my conclusion is that this weakness in the last few months has really come about as a result, most probably in my opinion, of the conflict in the Middle East and the undermining of confidence, in particular among the buyers. The buyers have stepped back, and that's caused the weakness. That's my opinion. Looking at the Wellington Region House Price Index graph here, you can see. Look at that orange line. That's the 3-month cumulative value movement. That was coming from sort of this time last year, April, May, well not this time, 15 months ago or so, April, May 2025, and you see that general consistent improvement up and to the right, that orange line, but then as soon as we were past March and into April, that line just falls off a cliff there. A little bit of a recovery there in July, so that blue line shows the 1-month results, so that was basically zero. Which brings the 3-month cumulative result up a bit too. So is this an early sign that the market is stabilising? Is the market getting used to the war and the uncertainty around all of that, and the risk and uncertainty around the flow of oil and petrol prices and that sort of thing? Is that now becoming the new norm, and perhaps people are just getting on with things? So it's too early to say, but potentially this could be an early sign of a market that's stabilising. But we won't know until we see the next couple of months' data. Wellington City, the graph looks similar kind of a shape. It's a bit more erratic. It's a bit higher highs, bit lower lows. That drop off about 3 months ago or so that we saw in the Wellington region graph, even more pronounced here in Wellington, and that sort of uptick, that hockey stick effect, potential early signs of recovery, not quite as robust here for Wellington City as we saw in the Wellington region. But as I say, time will tell. And there's the overall Real Estate Institute house price index graph, and so you can see that yes, we were gradually eroding since the last election, very slow sort of erosion of those values, a little bit of an uptick in the early few months of this year, but then again a clear turnaround and an erosion again in the last 4 months, as I say, since the Iran conflict broke out in late March. What about new listing volumes coming to the market? 438 in July versus 507 a year ago, 575 2 years ago, so that's down 14% on a year ago, down 24% 2 years ago. And you can see that blue bar chart there. It's a significant drop off. That is not atypical. We normally see that coming into winter, but the comparison to the last 2 years, that is interesting, because this is the first time in a wee while that we've seen new listing volumes significantly below what we saw a year and 2 years ago. Now, as a seller, of course, what you want when you're selling your house is fewer new listings coming to market, because you want to attract the attention of as many buyers as possible. The more competition in new listings that there is, the harder that becomes. And so a reduction in new listings is good news for sellers. And so this would be the main good news bit of data, I suppose, in this series this month, is we have seen a reduction in the amount of supply coming to market compared to what we saw in the last couple of Julys. Now, 3 years ago, as we headed into the election, we saw a significant reduction in listings coming to market because people have this concern that the uncertainty around the election means it's a bad time to sell. So counter to popular opinion, that can actually make it quite a good time to sell because there is far less competition. So it'll be very interesting to see if this trend that we saw, or this phenomenon we saw in July, a reduction in listing volumes, if that continues in August and September, then that might start to turn conditions around for sellers, and it might make things might make conditions better for selling in Wellington if indeed that happens. So let's watch that with interest. So yeah, not only is the listing volumes down on a year ago and 2 years ago, but compared to what's normal in July, 524 listings at 438, we're 16% below what we typically see in July. So again, this is positive news for those of you who are thinking about selling. The amount of supply coming to the market is low compared to what is normal. And there you can see it compared to 12 months ago. We were seeing sort of throughout most of late 2025, early 2026, we were seeing a recovery of increasing listing volumes compared to 12 months prior. But in the last few months, that trend has tailed away into this negative reading in July. So again, positive news for sellers in amongst what is generally a reasonably sort of bleak kind of landscape. What about number of sales? 524, versus 600 a year ago and 590 2 years ago. So 13% down and 11% down on a year ago and 2 years ago respectively. Again, look at that red line that shows us the trend. From coming into the election, we saw sales volumes sort of improving throughout 2024, improving in 2025, kind of stabilizing around that early 600s per month, and in the last 12 months or so, a gradual but reasonably consistent erosion of the number of sales taking place. So that, again, that is not good news for sellers. What we want to see is obviously a robust sale volumes, increasing sale volumes. The levels we've been operating at in the last couple of years, around the early 600s, on average over 6 months or so, is what I would call to be the very bottom of what would be considered a normal range of between 600 and 800 on average per month. So even when we had recovered to, we were still operating at reasonably low volumes, just nothing like the really drastically low volumes we saw in 2022 and 2023. But nonetheless, in the last year or so, again, it has been eroding. So that is not good news for sellers. So we've got this interesting combination of, for the first time in a wee while, relatively lower levels of new listing volumes coming on. That is good news for sellers, but combined with lower levels of sales taking place. So that is also that is not good news for sellers. Sorry. And so compared to sales, compared to what's normal, normally we see about 600. So 598 in July, number of sales, 524, significantly below that, 12% below what we would typically see in a July. Again, if we compare the numbers with 12 months ago, the trend there is pretty instructive. It's very, very clear. You look at that red line, you can see clearly it was in significant positive territory throughout 2024. Then as we approach 2025, the degree to which it was above the x-axis there, the degree to which it was greater than 12 months prior, eroding away, and it's gone into negative territory in the last 6 months or so, particularly, as I said before, since about March, since the war. How long is it taking to sell? A long time. In summary, 55 days versus 53 a year ago, 46 2 years ago, and the average for July is 41. So it's taking a long time. Again, that red line tells the story. It has been significantly and consistently increasing, taking longer and longer to sell property in Wellington, I'm afraid. Inventory, so how many weeks worth of supply do we have on the market? Again, that red line tells the story. We saw a deep reduction in inventory as we headed into the election. As soon as the election was over, the market was awash with new supply, new listings, and inventory shot upwards. Then throughout about 2025, broadly stable. Late 2025 and into 2026, we've seen it increasing again, especially, as I say, over the last 4 months or so. So 17.8 weeks worth of inventory in July versus 14.9 a year ago and 17 2 years ago. So 19% more inventory than a year ago and 5% more than 2 years ago. And in the last 11 years, on average, we've seen 10.9 weeks worth of supply. So at 17.8 weeks in July, that is 63% above the average amount of inventory we've seen on the market in the last 11 years. On to Trade Me listings, so just over 2,900 in August versus just over 2,700 a year ago and 2,653 2 years ago. So 8% more than a year ago, 10% more than 2 years ago. If you see the blue bar chart there, you can see that the number of listings on Trade Me has been reducing. That is normal for as we head into winter, so that's just a seasonal effect. The red line shows the 6-month moving average, and so that you can see that's been clearly heading upwards. Whilst we have seen a reduction in the amount of supply on the market in the last few months as we head into winter, if we compare August with what's typical in August, the amount of supply we've got at the moment is more than we've seen for at least 11 years when we compare it to the last 11 Augusts. So there's an abundance of choice still for this time of the year out there for those of you who are buyers. So folks, in summary, values have been declining in the last 4 months since the war. We were seeing some positive signs there, but that all turned around from April after the war broke out in the Middle East. So we're now 31% below the peak in values that we saw in late 2021 in Wellington City, and just over 29% down in Wellington region. New listing volumes are down compared to a year ago and 16% below what we normally see for a July. That is the one piece of good news for sellers, is that new listing volumes lower than a year ago, which is of course what you want if you're selling your property. Sales volumes remain quite weak, 13% down from what we saw in July last year. Selling times remain long and have been getting longer, broadly speaking, 55 days in July versus an average of 41. Inventory is elevated, well above historical norms. Trade Me stock remains high. It's the highest amount of stock we've seen in August for at least 11 years. So the message to sellers is, if you want to sell, it's absolutely possible to do so, but your pricing and your presentation remain absolutely critical. And for buyers, you have exceptional choice, negotiating power, and great value on offer out there in the market. So it's a fantastic time to be a buyer. So do get in amongst it if you are looking to purchase. Big thanks as always to Real Estate Institute and to realestate.co.nz for the data. Big thanks to you for checking in, of course. It's Adam at Lowe & Co. If you want individualised advice, of course, please reach out. Happy to help. It's Adam at Lowe & Co. Thanks and see you next time.